Thanks a lot, and thanks for inviting me to this great conference. So let me try to share my screen and make sure this is readable by everyone. So is this okay? Yes. Okay, excellent. So yeah, so in this talk, I'm going to talk about this new book that I published a few, recently, a few months ago in France, a few weeks ago in English language, called A Brief History of Equality, which, I thought would be appropriate for this conference because, this is again a book on the history of the distribution of income and wealth and social inequality in general. But first of all, this is an optimistic book. This is a book that's trying to show, that there is a long-run movement toward more equality, together, both more political equality, social equality, economic equality in the very long run, starting at the end of the 18th century with, of course, the French Revolution, to some extent the US Revolution. And this movement has been continuing in the 19th century, in the 20th century, and in a way is continuing today. And, I know this can seem like a paradoxical message at a time where people can be very negative about the world and about recent evolutions. And of course, I am aware of that, but, I'm trying to show in this book that, the rise of modern prosperity, economic prosperity, and also the rise of modern political liberalism in a way has come together with an extraordinary movement toward more equality in all dimensions, and this is this positive message that I want to stress, with of course a conclusion that we can continue in this direction. Now, this is a movement toward more equality that did not happen spontaneously or naturally in any meaningful sense. It involved enormous political mobilization, social struggles, and so the conclusion is not that things can go in the right direction just like this. So it's it's an optimistic message, but at the same time, it's also a message calling for more mobilization in favor of socio-economic and political equality in general. So before I show you some of this, the sort of historical materials that have led me to these conclusions and that I stress in this book, let me start by showing you, a number of some results coming from the World Inequality Report 2022, which we just published at the World Inequality Lab recently. So the World Inequality Lab and the World Inequality Database are a collective research program involving more than 100 researchers all over the world. And historically, we've started to work on the distribution of income. So, this is a World Inequality Database where we put new data online, almost every week. And every 4 years, we have this World Inequality Report. So we had one in 2018, we just had one in 2022, where we try to give a synthesis about sort of what's new about, what we've learned over the past 4 years in terms of global inequality perspective. So initially, the World Inequality Database started with income inequality, as I was saying. So let me give you a first sort of snapshot of the picture of global inequality today. So here you have a simple estimate, which is the share of total national income going to the top 10%. So, if we had complete equality, this share should be 10% because it's 10% of the population. If you had complete inequality, it should be 100%. So in practice, of course, it's always between 10 and 100. But what I want to stress here right away is that there are lots of variations. So it doesn't go from 10 to 100, but it goes from basically, say, 20 to 70. So, or 25 to 70. So in the most equal countries in the world today, which will be typically Nordic Europe, Sweden or Norway, it will be 25% of the total income going to the top 10%. in the most unequal country, which would be South Africa today, it would be about almost 70% going to the top 10%. And after South Africa, at the top of inequality, you would have a country like Brazil or Mexico or Chile, where it would be 60–65% going to the top 10%. So there are lots of variation across the world. Europe looks like relatively more equal. US is more unequal. The US are more unequal than Europe, of course, but they are more equal than Latin America, more equal than Sub-Saharan Africa, more equal than South Asia or the Middle East. So they are in relative terms, the most, and Japan is sort of in between Europe and the US, if you want to summarize. And so the most prosperous countries in the world are also relatively more equal. Now, they've not always been like that. What's interesting when we take an historical perspective is that Europe, which looks relatively equal today, at least, as compared to other parts of the world, if you go back 1 century ago, before World War I and in the 19th century, the top 10% income share in Europe was between 50 and 60%. So it was not South Africa today, but it was relatively close to Latin America today, maybe a bit more equal than Latin America today. So it has changed enormously over the past century. So this is, lesson number 2 is, this reality. So lesson number 1 is there is enormous variation in levels of inequality across the world. Lesson number 2 is there is enormous historical variation. So countries are not frozen at a certain level of inequality. Inequality is not determined by culture, forever. And, some countries are always more equal. Some countries are always more unequal. This changes over time through political institution, economic institution, these things change over time. So this was the first indicator, the share going to the top 10%. Maybe it's even more striking if you look at the other side, the share going to the bottom 50%. So, okay, so what doesn't go to the top 10 or to the bottom 50% by definition goes to the middle 40%, people who are in between the top 10 and the bottom 50. So look at the bottom 50% share. So again, if we had complete equality, this should be 50%, because after all, they are 50% of the population. If you had complete inequality, it should be 0%. So in practice, it's always between 0 and 50 again. But if you look at the world map, it goes from 5 to 30. So, or say 5 to 25. So again, the most unequal country will be South Africa with 5% of total income for the bottom 50%. Latin America will be between 5 and 10. Although again, there are some variations. You have some countries like Argentina, partly because of a sort of quasi-welfare state built under Peronism, or at least some variations in social state building as compared to Brazil or Mexico. You have the bottom 50% share is significantly larger than in other Latin American countries, but by and large, Latin America is say between 5 and 10%. Europe will be, in particular Northern Europe, as large as 25%. So when you are 50% of the population and you have 25% of total income, okay, you are poorer than average, because after all, you are the bottom 50%, but it means that your average income on average is about half of the average income of the entire population. So you are poorer than average, of course, but you are not hugely poorer. Now, if your income share is 5%, it means that your income on average is only 1/10 of the average income of the country in which you live. So, I think it's important to have these orders of magnitude in mind, because what this shows is that the distribution, of income matters a lot. If you only look at GDP and, GDP per capita or national income per capita, you can be completely wrong about the living standards of a huge share of the population, like the bottom 50%. So in particular, the fact that the bottom 50% share can move from a factor of 1 to 5, from 5% to 25%, means that for the same average income, for the same GDP per capita, the average income of the bottom 50% can vary from a factor of 1 to 5. So for the study of poverty and access to basic goods, it means that the distribution is tremendously important. So that's the first conclusion I wanted to stress. The distribution is important. It varies a lot across countries. It varies a lot over time. And Europe, and to a lesser extent, rich countries in general, including North America, Japan, are relatively more equal than the rest of the world, and they have become more equal over the past century. It's not something that was given already a century ago or 2 centuries ago. So that's the first point I wanted to stress. Now, the novelty in the World Inequality Report 2022 is that in addition to this data on income inequality, which we have gathered over time using historical data coming from income survey, national accounts, income tax data, many sources that we try to combine in the most consistent possible manner. We have, in the World Inequality Report 2022, we have tried to extend our work in 3 directions, which is the distribution of wealth, so property, what you own, the gender inequality, and environmental inequality in the sense of the distribution of carbon emissions. So I want to give you a quick snapshot of the main conclusion. First, about inequality of wealth. So, income is what you earn typically during a given year. Wealth is what you own at a point in time. So here we are talking about net wealth. So this is, this includes real estate, business assets, financial assets, net of debt. So this is always net wealth. Now, if we look at the distribution of wealth around the world, you can see, well, first, as compared to income, it's always much more unequal. It's always much more concentrated. And, the progress that has been made over time, so to speak, in terms of equality of wealth, has been relatively limited. So if you look at Europe, in particular, the bottom 50% share in total wealth, is only 4% in Europe. So this is better than North America, where it is 2%, or Latin America, where it is 1%. But 4% for the bottom 50%, that's really small. Still, there's been some progress in the sense that you can see this middle 40% group, which I call the patrimonial middle class in my work, now as almost 40% of the wealth in Europe, which is more than in other parts of the world. And the top 10% has only, about 60%, between 55 and 60%, which is, of course, a lot for the top 10%. But, 1 century ago, before World War I, it used to be 80, 90%. So, there's been some progress also in terms of wealth distribution. And, I think this has also been very positive. The emergence of this patrimonial middle class increased social mobility, increased, economic decentralization, the possibility for more people to create firms, to build a home for their family, so this has been a very positive deconcentration of wealth, but it's still quite limited. And, in particular, the bottom 50% basically owns very, very little wealth. And, one of the questions I'm asking in my research is how can we make progress in this direction? And, that's why I talk about the redistribution of inheritance, minimum inheritance for all, etc. Because at this stage, just waiting for more progress to happen, through economic growth or market competition or whatever, so far we've seen relatively limited progress, at least for the bottom 50%. For the middle 40%, there's been some more substantial progress. So this is the big picture about wealth inequality. Let me also show you, in the World Inequality Report 2022, we developed some new indicators about gender inequality with a very simple indicator, which is the share of total labor income, which includes wage income, self-employment income, going to women. So if there was gender parity, it should be 50%, or in fact, if you look at Time News survey and look at labor time by women, including domestic labor time, it's actually always more than 50% of labor time for women, so it should be at least 50% in a way. Okay, in practice, it's always very far from 50%. It's making progress in Europe and North America, but it's still relatively small, say, 35%, between 35 and 40% right now. 35% for women means that you still have 65% for men. So, it's still, enormous inequality. Now, of course, this is bigger than the inequality you get for a given occupation or a given job. But, the point is that women don't have access to the same occupation and managerial position and high-paid occupations than men. So this indicator puts all of this together, gender gap for a given job and unequal access to jobs. Of course, you then decompose between these different components, but we think it's useful also to look at this big picture. You also see that ex-communist country like Russia, China, start from a relatively high share for women historically as compared to capitalist countries. But actually, in a country like China, this has been going down in recent decades, partly because of the increase of very top labor income, which is mostly by men. So this is sort of counteracting the increase in women wages in other parts of the distribution. The last part of the report I want to emphasize is environmental inequality, with a focus on the distribution of per capita carbon emissions. And here, the big message is there's enormous inequality in carbon emission within each country and within each region. And if you go to the website, to the World Inequality Database website, you will find the same data country by country, year by year. But here I just give you sort of big regional averages. And the bottom line is, okay, we all know there are enormous inequalities between countries in carbon emissions, between the north and the south of the planet in particular. The north has been emitting a lot more carbon than the south historically, and is still emitting much more carbon today. But there's also what we know a bit less is that there's also enormous inequality within each country. So if you look at, say, Europe, the bottom 50% right now has an average per capita emission of about 5 tons, which is still too much. This should go down toward 3, 4, maybe 2 tons by 2050. But they are already sort of more or less in line with the objective for 2050. Now, if you look at top 10% emitters, they have 29 tons per capita. If you were to look at the top 1%, it would be over 100 tons per capita. Now, and in North America, that's even higher. So the conclusion that we draw from this is that it's going to be very difficult to address the climate challenge without a drastic reduction in inequality in general, economic inequality in general, and in particular in terms of inequality of carbon emissions. Because if you come to the population, and in particular to the bottom 50%, and you tell them, well, everybody will have to reduce proportionally their carbon emissions through a gigantic carbon tax or or general increase in energy prices, I think you're going to end up with a gigantic yellow vest movement everywhere, in France, in the US, in Indonesia, in Brazil, everywhere, because, people in the bottom 50% will tell you, well, look, maybe we can make effort, we have to change something, but, to begin with, you will have to reduce much more, the emissions at the top. So, it's like with the invention of the modern progressive income tax in advanced countries at the beginning of the 20th century. I think at the beginning of the 21st century, if we want to move toward more equality, and if we want to address our social and environmental challenge, we have to move toward progressive carbon taxation, I think also progressive wealth taxation, so as to treat differently people who have 5 tons of emission and people who have 30 tons or 100 tons. Otherwise, it's just, it's not going to work. I think nobody will follow this kind of thing. So this is the big picture coming from the World Inequality Report. Now, I want to go back to history and tell you a bit more about how the long run movement toward more equality, which I have already talked about, in particular for income inequality in Europe, which remember I have shown you on the map before that distribution of income is more equal in Europe and has become more equal over time. And now I want to tell you a bit more about how how this evolution took place and how can we what kind of conclusion we can draw for the future. So I'm going to try to summarize some of the lessons that I described in this book, A Brief History of Equality, which I should say it's maybe a more optimistic book than my previous book. Although I think if you read them well, the previous books were also optimistic, but I guess they were so long that it was not always easy for everybody to see that. So at least this one is much shorter. This is 250 page long. This can be read in a weekend, I would say, as compared. So I wrote 3 big books on the history of inequality: Top Incomes in France, which was published in 2001, Capital in the 21st Century in 2013, Capital and Ideology in 2019. Each of them is about 1,000 pages long, so this makes 3,000 pages. So please don't read them, unless you have a lot of time to devote to this subject, which I think is an interesting subject. But if you have limited time, read this one. It's 200 pages long, and it gives you, I think, some of the most important finding. And in particular in this book, as I said, I stress, the existence of a long-run movement toward more equality. So, just so that you get a sense of the structure of the book, there are, it's a short book, but you still have 10 chapters. So, each chapter is about 20 pages long. So, this in the book, I start looking at the long-run movement toward more equality, in particular the slow deconcentration of wealth and power that comes with wealth. And I'm going to focus on this in my presentation. There's also a couple of chapters on the heritage of slavery, colonialism, the question of post-colonial reparation, in particular the issue of reparations that were paid by Haiti to France in order to compensate the French slave owners, which the New York Times talked about recently, as some of you may have noticed. But I'm not going to talk about this today. There's also the book focuses a lot on what I call the great redistribution between 1940 and 1980, which I'm going to talk a little bit about today. And then there's also some chapters on racial equality and discrimination and neocolonialism and the transformation of the world economic order, in particular the international tax system, which I'm not sure I will really have time to talk about. But so that's the contents of the book for those of you who are curious. In this presentation, I'm going to focus on this limited movement toward more equality of wealth that we see in the long run. And so here I look at France because one good thing about France is that we have actually very good data about wealth, starting with the French Revolution because of the system of property registration and taxation of inheritance that was put in place at the time of the French Revolution, which did not redistribute wealth too much, as you can see from this picture, but at least gave us an observatory of wealth through the archives and inheritance archives, which we've been exploiting with my colleagues. So what you see on this graph is that in the long run, and in particular during the 20th century, and in particular between 1914 and 1980, you have a significant movement toward more equality of wealth in the sense that the share of the top 10%, used to be 80 to 90%, and today it's only 50, 60%, which is still a lot for 10% of the population, but it is a significant decline. And the middle 40%, people who are in between the top 10 and the bottom 50, their share has increased significantly. In the 19th century, this group had a wealth share that was of course, larger than the bottom 50% because, by definition, they are richer than the bottom 50%, but not that much larger than the bottom 50%. So in the sense, there was no middle class, well, in the sense that the share of national wealth going to this middle 40% and the average wealth going to this person, was very small. I mean, it was larger than the bottom 50%, but not that much larger. So there was really a huge gap between, say, the top 10 and particularly the top 1 and the bottom 90. Now you can see that the middle 40, this middle 40% today, which I call the patrimonial middle class, has a wealth share that has declined a little bit since the 1980s, 90s, and it has declined even more in the US. So if you looked at the same graph for the US, it has declined toward 30-25%. So the decline of the middle class share in wealth has been more significant than in France. But in France and in Europe, so I should say this graph for France is quite representative of Europe in general. They have today almost 40% of total wealth. So, if you are 40% of the population and you have about 40% of total wealth, it means that on average, your average wealth is about the same as average wealth of the country, which today, in a country like France, will be about 200,000 euros per adult. So, this means that, people in this middle 40% group, these are people who have 100, 200, 300,000 euros per adult. So, with this kind of wealth, you are not very rich, but you're far from being completely poor. And it's a big difference, as compared to the bottom 50% who own, 5,000, 10,000, or zero, very, very small amounts. And so, 100,000, 200,000, 300,000, that the rise of this patrimonial middle class, I think is probably the most important long-run transformation, including, for sustainability of political democracy, electoral democracy, and political and economic liberalism in general. This has transformed the structure of society because, the concentration of wealth is also the concentration of economic power, economic opportunities. When you have 100, 200, 300,000 euros in wealth, it makes a big difference. For people who own millions or billions, maybe it's 100 or 200 is equivalent to zero, but in fact, it's very different because when you have zero or when you only have debt, basically this puts you in a very weak bargaining position vis-a-vis your own life and vis-a-vis the rest of society. You have to accept everything. You have to accept every job, every labor condition, every wage you are being offered. If you have 100, 200, 300, you can negotiate a bit more. You can refuse certain offers. You can create your own firm in certain cases. You can buy your home and so that you don't need to pay your rent each month to care for your family. So it puts you in a very different position. And I think a society where the bottom 50% individuals would also have, 100, 200,000 euros in wealth, I think will be a better society, generally speaking, because again, wealth is about opportunity, it's about power. It's also about power, of course, at the very top. I think a society where the top 10% and even more so the top 1% or 0.1% have too much wealth, too big a fraction of wealth, is, this creates a lot of negative effect in terms of, concentration of political power, concentration of political voice, influence on the media ownership, financing of political campaigns, etc., etc. So, I think for all sorts of reasons, here we're talking about something that is much more than just about economic numbers and money amounts. It's about power, it's about democracy. And so if we look at this long run evolution, I think one of the big questions is how can we do better than this? Let me first remind you that there's been some progress over the course of the 20th century. So before World War I, this extreme concentration of wealth that you see on this picture, so this was not only in France, this is, if you look at all European societies for which we have data, you have this kind of extreme patrimonial wealth inequality in the pre-World War I period, including in a country like Sweden, which will viewed today as very egalitarian, but which at the time was one of the most inegalitarian country in Europe, with a very unequal political system. Let me remind you, Sweden until World War I was a country where not only the top 20% male property owners could vote, but within this group of top 20% male property owners, you could have between 1 and 100 votes, depending on the level of your wealth. And in municipal elections, there was actually no upper limit, so that you had several dozen Swedish municipalities where a single individual would have more than 50% of the voting rights, and so would be a perfectly legal dictator. And even corporations at the time had the right to vote in municipal election in Sweden on the basis of their capital invested in the municipality, which is something that multinationals today would love to have this, but they don't even dare asking for that. So sometimes they find other ways to get the same outcome, through political financing and media, etc. But the very fact that they don't even dare asking for that is still, I think, is a sign of progress, in a way, civilizational progress over a century. But Sweden in 1910 was a country where you could have economic liberalism and the supposed value of political liberalism, but in fact codified into this extreme form of political inequality of power. And then, through working class mobilization, trade union mobilization, the Social Democratic Party took power in 1932, stayed in power for many decades, and transformed, put the state capacity of Sweden to the service of a completely different project. Basically, the registration of income and wealth was used not to distribute more voting rights to rich individuals, but rather to make them pay very progressive tax and to pay for a system of relatively equal access to education, to health, which, is not perfect. We've seen with the pandemic all the limitations of our public health system and education system, etc. But at least is much better than pretty much everything we had seen before that. So this is again an example that there's no cultural or civilizational reason why a particular country should be equal or unequal, and that things can change pretty fast through the transformation of institutions and through political mobilization. Sweden is also an interesting case because World War I, World War II played a very limited role in this transformation, which shows that you don't need big catastrophe to get this kind of change. And what matters in the end is more the positive transformation of the legal systems, the fiscal systems, the educational system, and the whole set of institutions. Let me accelerate a little bit, and I'm looking at Adrien so as to be sure that I'm not spending too much time. We said you want me to speak for about 40, how much longer?
Almost again 15 minutes would be great.
15 minutes,
20
okay.
minutes.
Okay, that's perfect. So if we look, this was Europe a century ago. If we look at the distribution of wealth today, you can see that, so in Europe, there's been some progress. That's what I've already told you. The middle 40% has now a much bigger share of wealth than a century ago. The bottom 50%, it used to be 1 or 2%. Now it's about 4 to 5%. Okay, it's a bit better, but it's really very limited progress. The United States today is in a situation that's sort of intermediate between Europe 1913 and Europe 2020, and Japan. My recollection is that it will be intermediate between Europe today and US today. But by and large, you have pretty much everywhere a persistence of hyper concentrated wealth, with an improvement of the share going to this middle 40% group, but very limited progress for the bottom 50%. So now, how how did we make progress over the 20th century? I already mentioned, the case of Sweden, the rise of the welfare state, which was certainly, one of the big explanations for the movement toward more equality of wealth, and especially more equality of income, because this is for the distribution of income that there has been more progress historically. Just to make clear, when we talk about the rise of the welfare state, which I prefer to call the social state, because I think it's really the right of relatively equal social rights in terms of access to fundamental goods, starting with education, health, old age, economic security. And when you look at this transformation, so here on this graph, you have so this is the summary of the rise of the social state in Europe. So this is the average for Germany, France, Britain, and Sweden. And so you have variation between these countries, but by and large, this is the same, relatively similar evolution everywhere. What's very striking is to see that, okay, before World War I, you had a small rise in social spending, but this was really very small. So, before World War I, total fiscal revenue was always less than 10% of national income, and most of the tax revenue would be used to pay for the army, for the police, the military spending in particular, could be half of that. Actually, and this were used a lot through, the colonial expansion and then through war between European powers, etc. We all know about this. What I want to stress is that the education spending at the time were really, really very small. So in every European country, total education spending before World War I was less than 0.5% of national income. At the time, in the US, it was about 1% of national income. So it was still quite small, but it was twice as large as in Europe. And there's been an educational advance of the US throughout the 19th century and throughout the 20th century. So in the middle of the 20th century, in the 1950s, you already have about 90% of a cohort going to high school in the United States, whereas in Europe, in Germany, in France, or in Japan, at the time, it was 20, 30, 30 to 40% in Japan, which was relatively ahead, but the US was far ahead. And you have to wait until the 1990s in Germany, France, Japan to reach the kind of 90% quasi-universal access to high school, which you already see in the US in the middle of the 20th century. So this rise of education, which was the key for US prosperity, if you try to explain why US was so much productive in the middle of the 20th century than Western Europe or Japan, it's clear that the huge educational advance was very important. But more generally, forgetting about this US versus Europe comparison, just looking at each country separately, and in particular looking at Europe on this graph, the enormous educational expansion which took place, was really one of the key factors, both for the rise of equality and the rise of economic prosperity. So if you take education spending, I told you it was less than 0.5% before World War I. Today, it's about 6% of national income. So, it was multiplied by 10. And this is what allowed us to move from a very stratified, school system in 1910, where basically only most of the population would stop at primary school and only the elite would go to secondary and higher education. Whereas today you have a huge broadening of access to secondary and to a large extent higher education. Now, the paradox you can also see on this graph is that the total education spending has actually been stagnating since the 1980s, 1990s, around 6% of national income, which is somewhat paradoxical because the share of a generation going to higher education has actually increased a lot in recent decades, which means that per student investment has actually declined in recent decades, as compared to national income per capita. which is very paradoxical. And I think, it's probably one of the main explanations for the growth slowdown and the decline in productivity growth that we've seen in recent decades. Now, you can see on this graph that, of course, that's related to the general stabilization of the level of public spending and tax revenue, which have sort of stabilized around 45–50% of national income on average in Europe. This comes from there was sort of a collective political decision somehow to say, okay, we have to stop somewhere, and we are going to stop exactly at this level of tax revenue and public spending, which I understand the rationale for that, but I think in the long run this is not such a good decision, because given that all spending and all age spending have to continue to rise at least a little bit with the aging of the population, if you want to stabilize total spending, in effect, what you have is a stagnation or even a little decline in education spending, which, I think is not so good in the very long run. And so, I think we have to look at this seriously, and we have to ask ourselves, if we want to have an extra, investment in the future in education or other social spending or public infrastructure, this will have to come also with a tax system that is more equitable, and that is, asking more to group at the, top of the income and wealth distribution, because, I don't think the middle class or the lower middle class will accept to pay more tax to pay for that. So that's why, and this is the next point I want to stress, the rise of the welfare state and the development of the modern social state has to come, with the rise of progressive taxation. And historically, this was very important. So if you look at, the evolution in the 20th century, the invention of progressive taxation was a very important part of what made the rise of the welfare state politically acceptable, in the sense of, so here you can see, so this is the evolution of the top income tax rate in 5 countries over this time period. So you can see that, in the United States, the top tax rate, was over 91 or even 94% under Roosevelt. But, if you take the average between 1930 and 1980, the average in the US was 82%, which, apparently did not destroy American capitalism. Otherwise we would have noticed it. And, if anything, this was a period of maximum prosperity of the US economy, where the productivity gap with the rest of the world was the largest in history, and productivity growth rates were the largest in history. Why is it so? Well, because the true source of economic prosperity, again, is education, not inequality. And, well, I'm not saying you want complete equality. Maybe you want income gaps of 1 to 5, 1 to 10, but what's for sure is that income gaps of 1 to 100 or 1 to 200 or 1 to 1000 are completely useless. If you compare different historical periods, you can really see that the enormous decline of income gaps at the top, which happened in the middle of the 20th century, in particular through this very, very high tax rate at the top, did not damage at all economic productivity and economic growth. And at the end of the period, these top tax rates were divided by 2, but in fact, growth rates, national income per capita growth rate was also divided by 2, in the 3 decades following the Reagan reform. So this was supposed to boost economic growth and to allow average income and average wages to rise like what we've never seen. Well, what we've seen is a division by 2 of macro growth rate. And, I think the explanation has a lot to do with the stagnation of educational investment. But in any case, if you look carefully at the historical evidence, I think very progressive taxation at the top of the distribution was a big success historically. And I think it's really high time to revisit this historical experience. I know, it's difficult to have a quiet discussion about these issues, because when people see these tax rates, they become crazy. They have very strong opinion about this, even if they've never looked at the historical evidence. But, I think it's important, to look at the historical evidence, look at the data. I don't claim we have perfect data, But all the historical evidence we've been putting together, suggests that this very high level of progressive taxation, were a big success. They reduced inequality at the top, which was useless inequality. And also, they made it more acceptable for people in the middle class, lower middle class, to contribute to this big rise of the welfare state, which of course cannot only be paid by the rich, it has to be paid by everybody. But if you want the middle class to accept contributing to this, it's very important that they have the feeling and that this is the reality that people at the top are paying more than they do, which of course today is not the case anymore through big tax cut at the top, tax evasion, free capital flows without any proper collective regulation. And I think that's this is putting our social fabric and our entire democratic fabric at risk, because if people, if the middle class feels that the rich are paying less than they do, then maybe they don't want to pay for people below them, and the entire social contract is being questioned. So how can we make further progress in the future? I've already talked about the redistribution of inheritance, which I think, together with the welfare state, together with basic income and equal access to health and education, could make a big difference. So here, I described a specific proposal where everybody at age 25 would receive a minimum inheritance of 120,000 euros, which would be about 60% of average wealth per adult in the French context, which is the average wealth per adult is about 200,000 euros, as I said earlier. So here, everybody would receive 120,000 at age 25. This will be, the bottom 50% right now receive close to zero, and they would receive 120,000 after this system. If you look at top 10% children, right now they receive about 60% of total inheritance. These top 10% children, on average, they receive more than 1 million euro on average. After the tax reform and the progressive inheritance tax and wealth tax that used to pay for minimum inheritance, they would still receive 600,000 euros, which is still a lot more than 120,000 euros. So we will still be very far from equality of opportunity. And if you want my opinion, we could go much further than this. But what's very interesting in this discussion is that many liberal thinkers, who say they are in favor of equality of opportunity at a theoretical level, when you make some practical proposal in order to be further, closer to equality of opportunity, people, get very anxious. They start asking, yes, but these poor children, what are they going to do with the money? Maybe we should put limitations on what they could do with this 120,000 euros. Yeah, I have nothing against putting limitation, but then this limitation should also apply to wealthy children as well, because otherwise this has nothing to do with liberalism. This is just pure elitism and actually quite authoritarian thinking with respect to poor children. So that's, step number one if we want to move further in the direction of equality. That's not going to be simple, but the development of the welfare state was not simple. The development of progressive taxation was not simple. So if we look, this is not going to happen next week. But if we look at the long run, the century, in the 20th century, this is the kind of evolution which could make a big difference. Another kind of transformation that I describe in the book is the more equal power sharing and more participation by workers in corporation. So, I'm not going to get into the details, but the basic idea is to extend to every country and every size of firm the sort of co-determination / co-management system that you have already in Germany, in Sweden, where you have up to 50% of voting rights going to worker representative in large companies in Germany. So this, the idea would be to extend this to all countries and all size of firm, and also in the 50% of voting rights going to shareholders, to have a limit of maximum, say 10% or 5% of voting right going to a single shareholder in large company. So what you show on this graph is that for small companies, a single shareholder will still have majority control in terms of share of voting rights, but in large companies, you would have to discuss. Basically, you would have to have more economic democracy. You would have to involve, the thousands of or hundreds of engineers, technicians, workers, which after all, have invested their labor in the company and sometimes are much more committed to the long run evolution of their companies, and shareholders will go and buy and sell their shares and have a very short-run objective. The last part of the transformation toward more equality, which I want to conclude with, is again education, because education is the area where we've made a lot of progress historically. But there's still a lot of progress to be made. So we've moved toward universal access first to primary school, then to secondary school. But when it comes to university and higher education, we still have enormous inequality, and I would say a lot of hypocrisy. So again, we all pretend in advanced liberal societies to be in favor of equal opportunity, etc. But okay, this is what we have. So this is data coming from works of my friends and colleagues, Emmanuel Saez and Raschetti, who have put together the income tax return of the parents with the social security numbers of the students in the United States. And this is what you find when you compare percentile of parental income and rate of access to university. So you can see this is almost the 45-degree line. So, well, not exactly. If your parents are in the bottom 10% of the distribution, you still have a 25% chance to go to university. And if your parents are in the top 10% of the distribution, you only have a 95% chance to go to university. So, it's not going from 0 to 100, it goes from 20 to 95, but, this is quite extreme. And of course, in fact, it's even worse than that, because, when you're in the bottom, the universities you go to have nothing to do with the universities you go to when you're at the top. So if you were looking at actual spending per student, it will be even more extreme. So, the question again is this the best we can do? Or, can we do better? And if we want to do better, how are we going to monitor this movement toward more equality? How are we going to measure collectively? How are we going to have more transparency in actual access to, because it's not enough to say we're in favor of equal opportunity, etc., etc. You need to be serious about it and to measure it. Otherwise, it's a pure rhetorical claim which has little meaning. Now, this is particularly extreme in the case of the US, but let me tell you, because of very expensive private universities, etc., but even in a public system like in France, this is also pretty extreme. So here this is a different way of measuring inequality, where I look at actual educational investment. And so here what I do is that on the horizontal axis, I don't have parental income, I have the percentage of the distribution of total educational investment received within a cohort. So here I look at the French students, who were born in 2000, and so who are completing their higher education today. And so if you look at the top 10% of a generation going for the most, who receive the highest educational investment, they receive on average, up to 250, 300,000 euros in total educational investment. So this is from kindergarten, primary school to higher education. And so people at the top are typically students going to the most elitist track of our higher education system, to the Grande École system or preparatory classes, which are relatively well funded in France. Per capita, per student spending in the elitist track is about 3 times bigger than in the standard university track. So people in the middle are typically the people going to university. And people at the bottom, who receive only 70,000 euros are people exiting the school system at age 17 or 18 and not going to higher education. So you can see, so this is only the public spending, and private spending can amplify this. But already the public spending system, in effect, is giving 3-4 times more resources to top 10% children to bottom 10% children. Now, in these top 10% children, of course, we could have children with low income, and in the bottom you could have children with high parental income, but of course in practice there's a big correlation between how far you go in education and parental income, so that in effect the public education system is going to reinforce the initial social inequality. So again, the question is, can we do better than this? Is this the best we can do? And if we want to do better, how are we going to monitor the evolution collectively? I want to conclude with an optimistic note, so to speak, which is that, even though this seems very unequal, what I've just shown you, this is actually much better than what we had in the past. So here, I compare France 2020 with France 1910, and I've also put, an example of a colonial society, which is Algeria 1950, just so that you realize how much further this can go, in a colonial setting in terms of inequality. So this is data, I should say, that has been collected from educational budget and more generally state budget by my colleague Denis Cognot, who is preparing a very interesting and important book on the history of the French colonial empire from the point of view of public spending and taxation, and who was paying what tax in order to finance what spending. And if you look at the data for Algeria, up until the end of colonial Algeria, basically the top 10% of the children who are the children of Europeans, because you have separate schools for the children of European and the children of Muslim Algerian, are receiving more than 80% of total educational budget. This is probably even more extreme in terms of segregation of schools and resources that when you have in the south of the United States, at the same time, where you also have, of course, segregated schools, between African American and white children, but the inequality in resources is not as extreme as what we get here. Now, as compared to this, France 2020, of course, looks very equal, and France 2020 looks also very equal as compared to France 1910. So, in France 2020, the top 10% of children receiving the highest educational investment is only 20%. Now, of course, this is still a lot because, the bottom 50%, they receive, say, between 30 and 35%, but, they are 5 times more numerous than the top 10%. So it still means, even here, France 2020 looks very equal, but in fact, the top 10% children receive 3-4 times more spending than the bottom 50%. This is this data, by construction, this is the same data for France 2020, which I used to compute this share. So this is showing you that, even though, the education system today looks very unequal, there's been a tremendous movement toward equalization of educational resources, which is, the primary factor for equality. And, of course, here we are not just talking about economic equality, it's also political equality, social equality, equality in participation to social life, political life, including economic democracy in companies that we're talking about. So, there's been a lot of progress historically, to summarize, but, there's still a lot to be done. And I hope I have convinced you, in this presentation that if we want to continue this movement, we have to be serious about measuring this progress. Because if we just talk about it without checking, sometimes all the hypocrisies that we collectively have about equality and inequality, we're probably not going to make as much progress as we should. And, it's in the end, we waste a lot of, individual and life and millions of lives, which could be made of more emancipation, more liberty, more freedom, more personal accomplishment in a more egalitarian system. Let me stop there, and thanks a lot for your attention.
Well, thank you, Thomas. And it would be better if we were in the same room, and it would be nicer, etc. You'll come to Japan next time. Okay. Thank you for a long talk about those two main papers that you presented, the World Poverty Report on the one hand, and your brief history of equality on the other hand. I think that some works are being translated in Japanese as well, and people will be able to receive them. I have noted for myself a few surprises in what you said, especially that optimistic tone that changed from the day of doom that I used to read to feel when I read some of your writings, and also a few questions of lexicon and of words. But we will have time to come back upon that later on. So for now, maybe Adrienne will introduce Lisa Herzog and Uno Shigeki for the discussions. We're running a little bit late, but please think that around 6:30 or so, 6:35, we would like to have questions and answers by Thomas and Lisa and Professor Shigeki Uno, because we already have quite some questions for you.